morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is April 3rd, 2023, and I'm going to go over your three threes for the week. I'm going to go over our top major asset classes, their performance, and our three favorite on a long-term basis. And then I'm also going to go over our how we are positioned on both bonds and equities on a short-term basis, and then hit the top three market movers for this week. So let's jump on in.
Okay, let's go over the top major asset classes, their performance on a week, 3-month, and a 1-year return basis. For the week, we had the US dollar and some of the bonds down about 0.5%, while a lot of the equities were in the green to finish out the month and the quarter. The S&P, NASDAQ, Russell, World, real estate, commodities were all positive. On a 3-month basis, we had the US dollar and commodities both on the negative side for the first quarter. We had a lot of equities in the positive, and we had the NASDAQ being the biggest winner, which I will go over on why they were the biggest winner here in just a second. On a 1-year basis, though, if we zoom out, we are still seeing a lot of negative numbers. So on a 1-year basis, we still are below water for a lot of the equities. The US dollar and gold are the only positives on a 1-year basis. Okay, why did we see such big numbers on the tech-heavy NASDAQ and in the S&P 500? Well, it was all from the 8 FANG and the MNT stocks, and that is Facebook, Meta, Apple, Amazon, Netflix, Google, Microsoft, NVIDIA, and Tesla. Those 8 stocks were the majority of the return because they have such a huge weight in the S&P 500 and NASDAQ, while the other 492 were actually negative for the quarter. So we've got to see this rally broaden out to some of these other stocks inside the S&P 500 and NASDAQ, or we've got to keep an eye on these top 8 when they report this quarter. And otherwise, you could just see this rally that we just saw completely go the other way and pull the market down. So this is going to be an extremely important earnings season for especially these 8 stocks. All right, let's go over the top 3 major asset classes on a long-term basis. We have both offense and defense still on the field. The NASDAQ, because of that performance, jumped into the top 3. We still have T-bill and gold in the top 3 also. All right, let's go over the bonds on a short-term basis. We've been in and out of bonds so far over the last 5-6 months. The last one we just added here in March 10th. We started out the year at 3.88 on the yield for the 10-year, and it's dropped to 3.49. When the yields go down, the price of the bonds go up, which is a positive for bonds. So we have been in bonds and out and back into bonds as of March 10th. So far, so good on our latest entry. So we shall see what happens here moving forward. All right, let's go over the equities on a short-term basis. We've been, as you can see, there's been a lot of movement here on the equity side. We started adding again last week. So far had a nice little window dressing for the end of the month, end of the quarter. After getting out in February, got back in here last week. And again, I've been saying this, it seems like every week. We are trading inside these 2 support and resistance zones between 3,900 and 4,200. And as soon as we get back out, we go right back into the next one. And so we're going to have to break out above 42 or consistently break out below 3,800. And then that will give us some more indication on where we're headed. But this is a chart of 9 months. And if you look back 9 months here, we were at 4,100 and we're at 4,100. We have gone nowhere. Well, we've gone up and down, but basically the market has returned 0 over the last 9 months. All right, let's go over the top 3 market movers for the week. We have the ISM manufacturing and non-manufacturing PMI numbers this week. On Monday is the manufacturing, and right now is projected to have fallen to 47.1 due to weakness in the manufacturing sector. On the other side, On the service side, the non-manufacturing side, we're projected to, on Wednesday, to come in at 54.9. So we're seeing a kind of two different type of markets. I know we are more service sector than manufacturing because we've outsourced everything, but we're still doing pretty well on the service sector side. So that's the number to keep and hold an eye on Wednesday. On Tuesday and Wednesday, we have a couple of jobs reports coming out. We have the JOLTS, which tracks the number of openings, hires, quits, and separations for the month. And that is projected to have fallen slightly to 10.8. So that'll be a number to watch. On Wednesday, we have the private sector jobs number coming out, and that looks at the private businesses, and it looks like they'll add about 200,000 in March, and that'll be down from 242. So not great, but not really bad either. Friday is the big jobs number, the non-farm payrolls. It was 311 last month, and they're projecting 240. Again, not great, but not terrible either. And this all comes on Good Friday when the markets will be closed. So this will probably be a market mover over the weekend heading into Monday. All right, that's it for this week. Thank you for joining us. Our next update is Monday, April 10th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.